Hello and welcome to this video on Deutsche Bank shares. Today, we'll be discussing the recent news that sent the stock tumbling, as well as analyzing the factors that contributed to the decline. We'll also explore the implications of the downturn on the global financial system and how investors may react going forward. Shares in Deutsche Bank fell sharply on Friday, dragging down other major European banks and leading German Chancellor Olaf Scholz to express confidence in the country's largest lender after fears about the global financial system sent fresh shudders through the market. Deutsche Bank shares closed down 8.5% on the German stock exchange after falling as much as 14%. That followed a steep rise in the cost to insure bondholders against the bank defaulting on its debts, known as credit default swaps. Rising costs on insuring debt were also a prelude to Swiss lender Credit Suisse's government-backed rescue by rival UBS. That hastily arranged takeover Sunday aimed to stem the upheaval in the global financial system after the collapse of two U.S. banks and jitters about Credit Suisse's long-running troubles led its shares to tank and customers to pull out their money. The market values Deutsche Bank at less than the assets on its balance sheet, which means investors are still very worried about the risks that the bank has on its balance sheet or its earnings potential going forward. This lack of confidence and trust in the bank has contributed to the recent sell-off. Despite the rebound under CEO Christian Sewing, the bank was a natural candidate for a market sell-off because of its previous troubles, large, sometimes complex holdings and market skepticism about its future profits. Deutsche Bank has turned in 10 straight quarters of profit, including €5.7 billion, $6.1 billion, last year, improving its fortunes under CEO Christian Sewing. Before that, the bank went through a long stretch of low profitability and troubles with regulators going back to the 2008 global financial crisis, including a $7.2 billion penalty from U.S. authorities for misleading buyers of complex mortgage-backed securities that later went sour. In conclusion, Deutsche Bank shares have been hit hard recently due to fears about the global financial system and the bank's previous troubles. However, the bank has been profitable in recent years under the leadership of CEO Christian Sewing, and analysts are relatively relaxed about its robust capital and liquidity positions. It remains to be seen how investors will react going forward and whether the recent sell-off is just a reflection of anxiety at the end of a stressful week, technical market factors, or signs of more problems to come for the weakest European banks.